Welcome to my daily review. You're looking at a daily chart of the Nasdaq, which fell 99 points today, or 0.5%, with volume, which we don't really care about, 11% above the 50 average, 50-day average volume. But anyway, the Nasdaq, pulling back a little bit today. Got, people just get really conditioned to going up every day. And when it pulls back, like, what's the matter? What's the matter? Well, there's nothing the matter. This is very healthy for the Nasdaq to pull back along its five. Now, I used to use the 10 for the Nasdaq, but I'm switched to the five because it's on a heater like a growth stock. And yeah, it did pull back to the five today. No great shakes, no big deal. This is very healthy. Longer term, what we're seeing is a rotation. Every day we're seeing a rotation. So you really have to watch the money flows, if you're trying to make money every day, which, some people do and some people don't. But you can see that five is 19,563 there. It undercut it just a bit at 551 and then closed there at 615. So yeah, just made a higher high and then pulled back. If I want to go to the 5-minute chart, you can see that here. There it is in the morning, the first hour maybe. Made that high of 19,800 and then just sold off into the close. There doesn't have to be any news. There's no rhyme or reason. It just, pulls back is healthy, profit taking, in some stocks. But anyway, okay, I'm going to go to the S&P 500 because and I'll come back to the Nasdaq because I want to talk a couple things about the Nasdaq. But S&P above 6,000 now, and that has become the floor, right? That's support as a low today. You see a 6,002, and the 5 EMA is 6,005. So these indexes are trading along the five, which is super, super strong. Pretty rare time, and we're just going to enjoy it while we have it. It's not going to last forever. I suspect we'll get to those highs and then have a pretty significant correction. Maybe I should say pullback, not a correction, but yeah, it stands to reason that when you get to that level here in the Nasdaq 20,204, that you're going to have some profit taking a pullback at least to the 21. That's my story, and I'm sticking to it. And I just want to point out here that, yeah, it closed a tick above the five, 2.7% above the 21, which is this magenta line, and they're both above the 200. This looks like a really strong uptrend. And like I said, my thesis is, and it's 9.3% above the 50, which is this line right here. My thesis is just going to get to that 20,204 or maybe a little bit above it and then pull back a little bit. And I think, this thing looks like all intents and purposes just wants to have that, V-shaped rally. We had the 27% correction, and now we're just getting it all back here. Like I said, once it gets to that 20,000 204. I think we'll just have a little pullback, I wouldn't say a major correction or anything, but pull back to this 21, the rising 21. But we're definitely in a strong uptrend on the indexes. Yeah, we pull back today a little bit, and it always goes back to, I talked about it yesterday with the Mag 7 or the Lag 7, whatever you want to call them. If the indexes are up, usually these stocks are higher. Apple is just having trouble at 200 there, close a tick below it. Microsoft, though, traded at an all-time high today. Yes, thank you, Microsoft. Definitely one of the stronger Mag 7 stocks. Closed there at an all-time high. And then the other one was Meta Platforms. This is another one in the lag 7 that, just pulled back to the five today. And this is healthy to me. I mean, if you watch your leading stocks, if they pull back to the five and find support, you want to see a bounce there. And actually, later on in this video, I'm going to show you a bunch of stocks of leaders that were former leaders that came off our relative strength list that pulled back to their moving average. And some of them bounced and some of them didn't. And this is the type of information that you want to have out of, your stocks, right? So you know which stocks to avoid and which stocks, to buy or own or, hold long. This is Tesla. Just too much noise around this stock for me. Yeah, it's just too much drama. But it bounced and now above, undercut the 200, now above. So that's Tesla, whatever. Tesla and NVIDIA, it's just a lot of noise. NVIDIA, not quite as much drama here. It's just involved with the China fiasco. 142. This thing looks pretty good. If you look at the weekly chart, though, it's just been dead money for, I want to say, a little over a year now, or about a year. I shouldn't say dead money. People get really upset when you say that. Yeah, June 21 it was 140, and now here we are. What is it, June 11th? 142. So it's been a year. Yeah, I think, I could show you a ton of stocks and I think I'm going to do that this weekend because I understand why people love these stocks because they've been so good for so long and they just think they're going to go up forever and ever, but they've become overloved. And I'm not going to say overbought. They're overowned, they're overloved. And there's no other mutual funds out there to buy them. I mean, they've just been bought already. So the funds are gravitating to more speculative names and smaller cap names. And I'm going to get there in a minute, eventually, after I get through these lag sevens. That's Google shaping up pretty nicely here in this cup shape pattern. And don't I get it. I get why people love these stocks because they've been so good for so long and they're vital to our everyday, everybody owns an iPhone or uses Google or Amazon. I get it. But it's just we're trying to make money in stocks here. So I've been steering people clear of this thing, all these lag sevens for a long time. Amazon for a trade and Meta for a trade, or even Tesla or Nvidia for a trade are fine. But, longer term, there's a lot of stocks that I could point to. They're going to outperform these. Amazon, I like the cup with handle. This thing just cannot break out though. I'm going to include another one here. I'm going to call it the Mag 8. How about that? Palantir doesn't really belong there because this one's actually moving. Made a new high today at 140 and then pulled back abruptly. It was a weird looking candle there. I don't know what happened there. A little blip. Instead of a flash crash, it was a flash rise. And then it couldn't break through 140. Just pull back immediately. I mean, if you own calls and it went up to 140, just go yippee-ki-yay, I'm out of here. If you're watching it that closely, tick by tick. But overall, Palantir's trying to break out here, and it's just having a real hard time. You can see it pulled back to the 21 last week, undercut it, and now has rallied 4 sessions in a row. Um, this was Thursday, I believe, and then Friday had a bounce off the 21. And then Monday, Tuesday, Wednesday, it's been up every day. However, it closed today, at the middle of the range. So, also the indexes were down. There's general market weakness. So not a bad day overall for Palantir. And anyway, that's enough of the Mag 8, I guess, because I want to get to what's really moving. When it was the quantum computing, the energy and the aerospace, the speculative aerospace stocks. I'm going to get there in a minute here. I'm going to start with QUBT. This is one of those, quantum computing names. It was up 25%, which is, I would call this highly speculative name. I know people think quantum is, the all be all end all, going forward, but and the stocks certainly are outperforming. I mean, this thing's been a monster. If I want to just go to a 1 year chart, yeah, it's up 2,600% in the last year. Okay, so I'm not making light of this. Big moves in these names. But it's getting a little frothy here, I think. IONQ, this is one that gave you the old okey doke today. I like this because it looks like OKLO, right? It's got this nice cup with handle, base. Really sold off hard there. But it's got this nice cup, and then you got this handle here, right? A nice little shakeout down to the 21. Looked like it was going to pop, and then it gave you the old okey doke today. If we look at the 5 minute there, look in the morning, like the first half hour. Looks like, oh my gosh, this one's really going to break out. Yeah, it's 50 minutes into the session. It was near 44 and then just pull back and close below 40. So that's a hell of an okey doke right there in IONQ. And you got to know, these are highly speculative and they're wild stocks. They move around a lot, and I personally don't care for them because I'm a fundamentals guy at heart. Earnings and sales growth are what I gravitate towards, but I got to recognize that these things are really kicking ass and making people a lot of money. D-Wave, this one didn't even pull back to its 21, holding above the 21. They had on a 400 million secondary offering. So I'm watching to see how it holds up the next couple of days after this offering. It was down 2.5% today. But really, if I'm going to own a quantum computing stock, I'm going to IBM. They paid their dividend last night. Yippee-ki-yay. Thank you very much. And made a new high today. Very nice. Usually when companies have a big dividend, they kind of pull back a little bit because somebody's got to pay for that dividend. But it's almost 2.5% yield. And oops, sorry about that. Sorry for toggling back and forth. I know that gets a little bit annoying, but it had this, base on base pattern, then finally, ripped higher in January. And then it's been forming this base here, and of course, sold off with the rest of the market until we got liberated. And now it's been straight up. So straight up off the lows, which was 214, closed today at 281. So IBM to me, if I'm going to own something in that space, I know it doesn't have the growth profile. It's 1, 2%. But I mean, it's got, big market cap, and it's got earnings, they're going to earn 11, $12 next year. So to me, this is a lot more stable. I'm not going to make as much money on the upside, but there's not going to be as much money lost on the downside. And it's going to pay me 2.5% just to hold it. They bought HashiCorp recently, and that's going to be accretive in their earnings starting next quarter for the full quarter. And I think that was a really wise acquisition for IBM. Yeah, that was a great company, HashiCorp, and I think it's going to reap benefits for them as well as Red Hat. I'm not saying IBM is going to be a juggernaut, but if I want to own a quantum company, longer term, this is the one that I'm going to own. It's not going to be up, 4,000% in a year like I showed you earlier, but it's a little more, it's a lot more steadier and stable. And you can see the daily ranges. It trades tight. It's not a wild stock. All right. Onward with the quantum computers. I finished enough of what I wanted to say about the quantum computers, and I wanted to talk about the energy stocks. Now, I talked about these yesterday about the leading stocks, and this is certainly a leading stock in the energy group. It was showing up on our relative strength stock list for the entire time it was doing this, and then recently it came off because it undercut its 10 EMA and it pulled back to its 21 yesterday. So this is what I was watching for. Yesterday, the low was 458, and today went up to 484. And that's what you want to see in a bounce. Now, that's a bounce. People ask me, what's a bounce? That's a bounce. It got back above yesterday's high of 482. It actually closed above yesterday's high. So, yeah, nice 458 to 483. Yes, we'll take that all day long. Yeah. So, anyway. That's a bounce for GEV, and that's what I want to see in my leaders, and we're not seeing that from all of them, but that tells me this is okay. This is healthy to buy. If I didn't own GEV, I would buy it here on this bounce, and if I did own it, yeah, it sucks, man. It went from what, 500 to what did I say, 450? I don't want my stock going down $42, but it happens. And it relieves a little bit of the pressure. This is kind of like a little wedge pattern here, and it's going to happen from time to time. Your stocks are going to pull back, but what you want to see is support. And this thing was supported at the 21. That's what I want to see out of my stocks that I hold. Talon, now this one pulled back to the 21 and bounced like a mother. They had earnings, not earnings, they had a news. Help me out here, Marty. They signed a contract with Meta, right? Or Amazon, one of the two. Anyway, you had to provide energy, and this thing made a all-time high today, right? Yeah, look at that. Geez, consolidation and a breakout. That's why you got to look at stocks on multiple time frames here. Talent Energy, this one, yeah, man, that's really the first big base you can see. Yeah, it had a little base here and a base here, but this is the first base that it's had since it's had this monster run. There you go. A couple of months, like 5 or 6 months there, and then bam, making a new high. Up 12% already in June. I guess we're already almost halfway through June. Yeah. Okay. So yeah, having a good month, Talent Energy. All right. And then I got to get to some of the other like more speculative plays. OKLO out of Santa Clara, California, my hometown. These guys, they announced a contract with maybe these guys announced with Meta. I get confused with all the news. But anyway, just pulling back, didn't even make it to its 21. And you can see this is a classic. I don't know why Pattern Rec is not picking this up, but that 59.14, right, rallies back up, makes this wedge. Remember, I had this on the ready list last week and it was too soon. So I put it on again this week. I expected it to come back to the 21 and pop, but it had other ideas and just rallied up, 30% today. So if you own that one, congrats to the longs. It's down after hours because they reported what did they do? Secondary offering. I forget the amount, maybe 400 million, something like that. But this has a lot of short interest in it. And the shorts got fried today. Yeah, just yeah, 37% short interest. So Yeah, no glow. You can see this big base here, and then the rally higher. You know, the saying, the bigger the base, the higher in space. That's not really true. Yeah, it just needs a base. Okay, it doesn't matter if it's a big base, a little base, a flat base. You know, 3 weeks tight. It just needs a little bit of a base before it pops higher, especially in an uptrending market like this. SMR, another nuclear name, just going nuclear. These nuclear stocks are going nuclear once again. You know, it had this big run and sold off like, everything else until April 7th. It got liberated. And this thing's been on a heater as well, up 20% today. LEU. I'm getting a little excited, folks. Centrus Energy, not one that I've ever traded, not one that I've ever owned, but you got to recognize the strength of the group. And some of these leading stocks in this group are just they're right. This one's riding the five, Kelly Slater hanging five, right? And every time it pulls back to the five, it bounces. So to me, if you don't own it, just wait till it comes back there if you really need to own it. But if you do own it, maybe, trim when it pops and then, buy the dips and then sell the rips on something like that. It's a very consistent pattern. What else do I have here in the energy group? Oh yeah, I got to go back to VST. This is another one that, traded down to its 21 yesterday. Pop, not quite like a GEV. Sorry about that, folks. But, nice little bounce there for Vistra. Constellation, this is what you don't want to see. You don't want to see the squatting. All right. These things can't squat there on their moving average because if they keep squatting there, it's likely to undercut. So this thing needs to bounce pretty soon. I saw some other former leading stocks doing this stuff here. So you got to be careful of that. The further along, the closer we get to new highs in the Nasdaq, the more risk there is involved because there's going to be a correction. And so, yeah, the time to buy, obviously, is when they come down, right? There's less risk. Buying lower now as the index gets higher, there's more risk involved here as there's a greater chance for a correction in the index. And the third group that I wanted to talk about today was this, speculative aerospace group. I guess President Trump signed those flying car aviation executive order. Anyway, this thing just pulled back to the 21, actually undercut the 21 and ripped higher the last four sessions. That's Archer. Congrats to my buddies out there trading that one. And they like Joby as well. I don't know neither one. I'm just acknowledging the strength here. Pull back to the 21 and a rip higher. There's a couple other in this group. Kind of the spaceship, rocket ship, ASTS. I believe I had this one on the ready list this week. This one's had a nice week, up 17%. So if you had that one, you could see the blue dot there in the weekly chart. And then Rocket Lab is another one in this group. Yeah, this is the aerospace defense, kind of like the rocket ship, flying cars, more speculative type. The other one was RDW. I don't think I put this one on, but you can see this nice base here on the weekly. Yeah, it's up 10% today. Very nice. Pulled back to its five and found support. So that one looks pretty good as well. Anyway, I'm going to get out of the aerospace and defense. Actually, if I want to own aerospace and defense, I'm kind of a conservative, a little more conservative. I'd rather buy something like GE pulling back to its 21 or Howmet. I mentioned this yesterday. These things pull back to their 21, not bouncing, significantly, but not cracking through the 21 either. This is Kratos defense, the very strong group. This one popped off the 21. That's kind of what you want to see there. Not a squat. You want to pop the bounce, above 40.68. Didn't make it above yesterday's high, but, nearly a 3% move for Kratos. All right, so that's the quants, that's the energies, that's the aerospace defense kind of speculative plays. And I want to get to a group that's catching my attention here. LMB is on our relative strength list. If you look at that every morning at the mcstockcharts.com page, we put it at the top of the page. There's about 22 to 25 stocks there now. And these are trend riders, right? They're just riding their trends. And this is the type of stocks that trend traders want to trade, right? Showing relative strength. The problem is when they do what I just showed you with like GEV and some of these other stocks, that when they pull back to the 21, they come off the list. That doesn't mean the trend is broken. It just means that, they're pulling back. And what you do is you look for a bounce. And like I say, we're seeing it with some and not with others. But this is definitely one of those leading stocks on the list, and it looks pretty damn strong to me. Another one that I have owned and traded over the years is Fix Comfort Systems. Yesterday it pulled back to its 21, which is 469. Today closed at 496. So a nice, 30 point bounce there for Comfort Systems. TT is another one in the group. This definitely looks like a cup with handle pattern there at the 422. I would be tempted to put this on my ready list. You can see the yeah, Pattern Rec is picking this up here, as it's got this little cup, and now it's kind of handling out right here. This little bull wedge pattern as it pulls back to the 21. Not really a pop there yet, but yeah, I'm definitely watching this one. Train Technologies, and that's in the HVAC group, which is starting to look a little better. And there's hit and misses in here, like Carrier is one of the larger ones in this group. Nice cup with handle as well. So yeah, there's some stuff in here that looks pretty good. So paying attention to these. Modine, no, this is not one that I would be interested in. Anyway, I'm going to move on from the HVAC group to another group, and that's the finance fintech group. And I want to go to the first one I want to look at is SEZL. This one's showing up on our relative strength list. It pulled back yesterday, but closed above, the 10. So it stayed on our red list, even with that big bounce, right? It traded down to its 21 yesterday of 106 and then closed today at 131. So that's a $25 bounce, probably like 20%, more than 20% bounce off the lows. And that's what you want to see on a bounce, right? If I'm going to pull back, so anybody who's selling, you get out, the scaredy cats, the weak hands, they want to get out, the profit takers, that's fine. And then it pulls back to its 21 and then bounces. Didn't make a new high today. Came pretty damn close. 133.54. I like this one a lot. And I also like Big Dave. Dave's not here. Nope, Dave's not here. Knock, knock. Dave's not here. Dave is a little stronger than Sezzle because it didn't have that big shakeout and it's trading way above its 3.7% above the 5. So this one looks like it's yeah, breaking out here for Big Dave. 233. Very nice. Popped out of that 125 buy point area and has not looked back. That was an earnings break. And that's why we pay attention to these earnings gap. People make fun of me because I post, Glenn Close and what was the name of the movie? I forget it. But Don't Cheat on Your Wife should be the name of the movie. And she's the one that cooked the rabbit stew. And she says, I'm not going to be ignored, Dan. And these gaps should not be ignored. And this is why. So this one day it had a gap here on May 8th, and the high was 153. Well, even if you bought the high of that day, made a big mistake. And this is what I say, when we're in an uptrend, it will absolve a multitude of sins. And if you bought here chasing another hammer candle the next day, and the 158 is way in the rear view mirror. It's at 231 now. So, you're looking at like 75 points above your mistake of buying the gap. This one did not even come close to the low of the gap day there. Yeah, very nice action. So looking good for Dave. All right, I'm going to move on. Move on to construction. TPC. Now, when I think of TPC, I'm a golfer, so I think of TPC, the tournament players championship, like TPC Sawgrass and TPC Scottsdale. That's just the way my mind works. My buddies belong to TPC Stonebray there in Hayward. But TPC is Tudor Perini. It's a building, heavy construction company, and this one's riding the 5 since the breakout, right? I mean, you're talking straight up off the lows. What was this, $18 stock? This thing's pumping now at 41. Jeez, just surfing the 5 like Kelly Slater. And this is what we want to see as a swing trader, right? Just mind the 5 quietly. Nobody talks about Tudor or Perini, neither one. And I don't even know what these guys do, to be honest with you. It's building heavy construction, Sylmar, California, Southern California. In this, we got what do we have here? 25% short interest. So, and these guys are earning, $3 next year. It's got fundamentals. So it's not, fly by night company. It's got a balance sheet. So anyway, Tudor Perini, not bad. Sterling is one that I like in this group, building heavy construction. This one's straight up off the lows. What was this thing? 98, 96. Now it's 204. So it's been more than a two bagger. Quanta Service is another one that I like in this group, pulled back to its 21. Did it squat at the 21? No, it bounced. Yesterday, the low is 341. You can see the 21 is 341. So, that's almost to the penny right there. Now, today makes a high of 356. So I'd say that's a nice, yeah, $15 bounce. That's kind of what you want to see. Nice 3% move for Quanta Services. And then IESC, I'm throwing this one into the group, building maintenance group. Kind of a cup with handle pattern here, pulling back to the 21, finding support. So yeah, just a lot of stocks out there pulling back to the 21 and finding support. That's what you want to see. All right, I'm going to move on to the essential. One of the most essential groups of this era is the cybersecurity group, Zscaler. This is on our another stock on our list that I show in the morning. It looks like there's 24 items on that list this morning. This is one of them. Quite a few of the stocks that I'm showing you right now are on that list. But this one just pulled back to its five yesterday, having a little trouble with that 300 number. I expect at some point for it to rip right through there, like poop through a goose, but it's going to take its time. That's okay. Rubric is another one in this group. Pulling back. This one, this is what I talk about needing to form a base. And for me, I don't want to sit through a base building process because it takes time. It's going to take 3, 4, 5, 6 weeks for it to build this base. And meanwhile, I could be in other stuff, right? That's really moving that, can make me money. So rubric, just let it base. It had this double bottom base pattern, it ran from 47 to 103. Every runner needs a rest. And so rubric is resting. I still like it a lot. It's just that it needs some time to rest. Another one in this group is Cloudflare Net, and this one looks fantastic. I was going to put this one on, but I didn't, and it's just riding the five, man. Look at how long this thing's been riding the five, since it's been a month here. Yeah, so you don't have to own this very long to make money. We'll see what happens now that it's at that 177.37 level. But yeah, definitely another strong stock in that group. Of course, if you're talking cybersecurity, got a top CrowdStrike. You can see the group is a top 15 group here. And this one's just, it pulled back after the earnings to the 21, found support there at 445, did not stay there very long, now trending higher. And the other one in this group that I like is Palo Alto Networks. I believe I have that one on the ready list this week too. It not gonna, the 200's been a problem, right? It went up there and it got the Matambo treatment. No, 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 not today. And it pulled back. So it's gonna take another crack at it. We'll see if it can make it through next time. All right, that's it for the groups. I just want to go to some of the leading stocks that have been on our relative strength list that I post every morning and see how they're doing. You got to expect, at some point, no matter how long they ride their five, at some point they're going to pull back. There's going to be profit taking. And what you want to see is how they respond to these pullbacks here. This is Netflix 3 days in a row. Friday pull back a little, Monday undercut the five, and then Tuesday pull back to the 21. Today it bounced and it bounced back above yesterday's high by $1, granted, but still, that's what you want to see is a nice, find support and bounce. That looks fine to me. What you don't want is to see it crashing through or even squatting there. They've got to power through those bounce and power through to new highs, and that's what Spotify looks like it's doing. Pull back, not even to its 21 yesterday. Maybe we'll call that in spirit, right? 666 was the 21. It pulled back to 672. Now it's 709. That's the type of action that you want to see out of your leading stocks. Duolingo, this is what you don't want to see. Broke out, made a new high, and then kind of went sideways, and that's a nice flat base. You could think that, man, it could trade higher over that 540, and it didn't. Now it's $70 lower here at 473, sliced at 21. And for me, in an uptrending market, that's adios muchachos. I'm not taking that trip to the 50. It's bye-bye. There's too many other stocks that are showing strength, and you don't want to sit in this stock that's going to, form some sort of a base. There's nothing wrong with it. I mean, that's what stocks do. It's just that I don't want to hold it and waste my time. It's called the opportunity, cost, and I don't want to cost me an opportunity in another stock, maybe something like Robinhood or Shopify. Another stock that's bugging me is App 11. Pull back to its 21. Did it bounce? No, it's squatting here. So this one concerns me as well. This thing has to bounce here. Yeah, you could say it found support there. It didn't crash through, but it also didn't bounce. So definitely watching AppLovin closely. I had friends, they say, why do you even watch that stock? It sucks. Oh, really? It sucks, huh? Okay. So I just show them a chart here. Yeah, it's up like 400% in the last year. So I'll take a bunch of stocks that suck like that. This thing has the ability to move, and I'm going to continue to watch it. Yeah, it might slice its 21. It might trade to the 50, maybe. I don't know, but it also might bounce to new highs. So that's why I watch it. It's shown the ability to move really fast, and it's been a powerful stock for a long time. So I'm watching that one. It was just, this one again, this one's run a lot. It pulled back to, I'd say it's 10, probably the 10 EMA here, and then found support and bounced. Couldn't take out the old highs there, 77.80, but still, that's a nice bounce for Robinhood. Yeah, 3.27%. I know some people want to play with the leveraged ETF, which is ROBN. Yeah, I don't. Anyway, I'm going to move on. Another stock that I like is Shopify. I didn't have it on our ready list this week. Still looks good there, 112.38, the buy point. Traded up 3.5% today, off the 21, right? So that one looks pretty good too. Cup with handle pattern. What else do we have? Oh, Buddy, our friend Buddy the Elf, a long lost friend, looking damn good, buddy. This is your classic, Weinstein, stages, not the O'Neill stages, the Weinstein stages. You got your stage one basing, you got your stage two, you're ascending, you got your stage three, which, can't power to new highs, and you got your stage four decline. And now what do we have? We have, a stock coming out of, I would actually call it about right here. Stage two advanced now. It's getting into this type of a phase. I'm not saying it's going to do that, but it's starting a stage two advanced phase. You can see the ants here, the David Ryan ants. It gapped higher in earnings and it did not even come close to that. I think it was 108, 58. Yeah, now it's at 124.52. This thing's super strong. If you look at this on the weekly, it had this short stroke pattern last week where it went up 3 weeks ago. It went up 34%, and it didn't give back a darn thing, but it didn't take out the old high. So that's important. Just a quiet week. 119.45 was the high. The prior week was 120.81. Now what happens this week? Buyers come back in and it takes out that high from that gap week. So yeah, there you go. There's some volume coming in here, some institutions nibbling on this thing. Elf looks very good to me. But what I would say here, if you want to own it, you just got to watch the five, because I think it's going to do what TMDX has done, and that's just surf the five there. And right now it's 4.7% above the five, which today was around 119. So yeah, if it just wants to trend higher with the five for another couple of months until its next earnings report, I'll take that all day long. Since I mentioned TMDX, this is another stock on our relative strength list. Just grinding higher. Another Kelly Slater stock trending higher above its moving averages. That's a thing of beauty. Gapped higher on earnings. I got to take a look at the weekly here since I did that with Elf. Gapped higher with earnings. The next week, it did make a new high, and then every week just higher and higher and higher as that moving average just keeps rising and rising and rising. This is one with the, earnings and sales growth, with what growth managers look for. All right. I got to get to these, I don't know what you want to call them, computer software enterprise stocks. Okay. Uh, I don't know if I want to call them speculative. There's been a lot of news. These are AI stocks. They're in the news all the time, signing contracts. And, they don't have the balance sheet that you like, but man, they have the performance. They got the technicals. And, when you're just trading stocks, you're trading on technicals, basically. This has got that cup with not quite the handle yet. Your 5087 would be your trigger. If it pulls back, next few sessions, I say give it 5 days. It's already been like three, so maybe it'll pop off the five, or maybe it'll come back to the 10 and then make a new high there. But I like that one. I also like CoreWeave. If you followed me for, very long at all, I like CoreWeave. And I related it to eBay back in 98, and I think this one's going much higher. It just pulled back to its five today, and I had a couple people saying this thing sucks. It's a dog, man. These people are just like every day. Your stock's not going to go up every day. I just said it's a great opportunity to buy the dip. It's pulling back to the five, and how many times since it's broke out has it traded down 3 days in a row? Like never. Okay, so here's your breakout. Boom, 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 moving higher. There's up to 84. Yeah, pull back one day. Here it rises up to 116, pulls back to the five at 97. That's when my buddy shorted it. I'm saying, you're crazy. I'm not shorting anything like that. And then it, yeah, rallied up to make a new high, 125. And then it pulled back 2 days in a row. Okay. It had an inside day, then ramped up, pulled back to 105, but it just pulls back to its five. Okay. Then what does it do a couple sessions later? 150. Last week it was up to, what was that, Wednesday, 166. Had the Thursday real sharp pullback. It just pulled back to its five, right? Inside day, ramps higher. Inside day yesterday, pulls back today to the five. I'm not going to say it's going to make a new high tomorrow, but new highs are coming soon. And if you just look at the eBay chart from 98, maybe I'll spend some time over the weekend doing that. I think it's going to model something similar. I mean, the precedent works until it doesn't. And when the model breaks, you got to throw it away. But for me, for now, I think this thing's going much higher, 175. If you're doing next month's calls, 175 calls or something like that would probably, yeah, I think 175 is definitely in the works here for Corey. I could be wrong. I'm often wrong, but never in doubt. All right, another stock that I rarely talk about, but it's on the list of 24 stocks here that I'm not going to, go through right now. I'm kind of going through it in this report today. But anyway, just, grinding with the five. That's all it's doing. Groupon staying above its moving averages. This thing looks, fine. Retail internet stock, and this is one with it's going to have some earnings here. So it's going from losing money to making money. And usually in that first year or two, from losing money to making money, I switch over. Stocks do really well. So Groupon is doing really well. Carvana, another one on that list. And just surfing the five here once again. Now, this was expected to get into the S&P 500 and it didn't get in. Had a little bit of a pullback on Monday and Tuesday, but this thing looks fine to me. And the other one is Avis Budget. This one really surprises me at the strength of this thing because of, the rental car, just business. All right. There you can see it's trying to pull out of a stage four decline, right? Stage four decline forms this little stage one, whatever you'd call this, like a base. And now it's in its stage two advanced phase. So definitely don't ignore that one. Avis Budget, nobody talks about that thing, but geez, it's a very strong stock. A couple others in the steel group that, rarely talked about once again. This is ATI on our stocks of 24, the list of 24 relative strength stocks, just trading above the five. The other one is CRS. This one came off the list. Yeah, it pulled back a little bit, closed. Probably it's not high enough above the 10 here. It's, yeah, a tick below the five, but still a very strong stock. I wouldn't ignore Carpenter Technology. All right, that's it for me. Thank you for watching. Definitely every morning look at that strength list. Those stocks are definitely making, they're the ones that are flexing and making new highs and trending on their moving averages. So I know I have stocks in the ready list that have different types of strategies, but those are definitely strong stocks that are on that list. All right. Thank you for watching at mcstockcharts.com. We never give up except for in honor of the great Steve Jobs. We stay hungry, we stay foolish, we stay humble. And we want to listen to the earnings call from Oracle, which had a really fantastic, a strong, very strong call this evening. And I believe this could carry not only the software names, but the AI stocks. This is nearly a 500 billion. Tomorrow it'll be over 500 billion market cap stock. When they report a quarter like they just did with their backlog, going forward, this thing looks very good. Larry Ellison, saw him at a football game last year. He looks really good for his age. I think he's in his 80s, man. He's a very healthy guy. Anyway, I digress. Oracle looks fantastic. And the other one is OXM reported tonight. This is your Tommy Bahama brand. Yeah, this thing is just really hurting, down 9%. The retail stocks, the apparel, clothing, for a variety of reasons. There's tariffs. There's just weakened consumer. Uh, there's just a lot of reasons why there's hit and misses on the retail apparel clothing. This thing's got cash flow and return on equity. It's got a great balance sheet. It pays 5.5% to hold it, but man, it's 54% off of its 52-week high, and it's going to get another haircut tomorrow after that report today. And there's just no growth here, and so hate to say it, but Tommy Bahama not doing so well. Anyway, that's it for me. I'll have more information in the morning. More earnings reports tomorrow, Adobe reports, but the market looks good. If your stocks aren't getting some love, and you're out, and I don't know, your stocks aren't doing well. There's just been a rotation into those names that I showed you earlier, and it's just rotating every day. So I wouldn't be jumping around chasing the flashy thing, but if your stocks are not doing well, you got to reconsider and do an audit. I usually audit every weekend, and just you got to weed your garden, get rid of the weeds, and keep your flowers. And so those stronger stocks want to hold on to, even if they pulled back a little bit. At least me, something like GEV, to me, I mean, that's still a strong stock. That's a flower in the garden. That's not a weed, okay? A weed is something like Nike if you're trying to hold on to this stuff. That thing looks horrible. I'm sorry, I pick on Nike all the time, and Starbucks. Those two are my favorites. Wow, Starbucks looks pretty good. How come Starbucks is doing that and Bros just can't get out of its own way? Bros is pissing me off. This thing's gonna move when it wants to, and not when I want it to, and that's why it's pissing me off. Pull back to its 21.6970 on Tuesday. 69.78 was the 21. It traded to 69.70, so 8 cents below. Didn't pop today. It just kind of had an inside day. I'm expecting this to bounce real soon, but it probably won't. It'll probably do, it's going to do whatever it wants to do. But anyway, that's it for me. Thank you for watching at mcstockcharts.com. We never give up.